Hey, folks, my guest today is Justin Fisher. He's helping financial institutions bank higher risk businesses. The company URL, if you want to follow along, is called riskscout.com. Justin, you ready to take us to the top?
Let's do it.
All right, what's that mean? Bank higher risk businesses.
Well, essentially, banks bank consumers and regular businesses all the time. Higher risk businesses in our world are THC, so cannabis, hemp, CBD, MSBs, which are money service businesses. They move cash, ATMs, and there's about 30 other types. But basically, they require a lot of additional due diligence and compliance before the bank can ensure that they can bank them appropriately.
Give me an example. So I'm an investor that owns a bunch of ATMs. I want to bank with JP Morgan Chase. JP Morgan won't take me. Why don't they like ATM revenue?
Yeah, that's a great question. So ATMs are heavy in cash, right? Doesn't mean you're doing criminal activity, but because you're dealing with a lot of cash, the source of funds can be obscured, right? So the other side of ATMs is they can be kind of dangerous, especially if you decide to fill them yourselves. So between those two concerns, the banks, generally shy away from banking ATM operators, is what that's called. Little fact that people don't know: 60% of the ATMs in the country are actually run by independent operators. And when all this pandemic and surplus cash came out, like that's where people got their cash, was in rural areas or even urban areas where a bank logoed ATM isn't there. So they do provide a really important service. I mean, we're all down on 6th Street sometimes and we need cash, right? That's an independent ATM, you know?
Is it a good business? Can you make a lot of money running an ATM?
Yeah, there's great fees on it, right? I mean, it depends on where your ATM is. And the funny side point to that is you put an ATM in a cannabis dispensary because they're so cash based. Hopefully, you don't rake people over the coals with fees, but they can be very lucrative, about 15 times the profitability as a regular ATM.
Wow. How many ATMs are there in the United States?
Ooh, that's a good question. Hundreds of thousands. I don't know the exact answer to that, but definitely the larger percentage is non-bank ATMs.
Why hasn't anyone rolled up independent operators?
It's a good question. A lot of these operators are longtime family owned businesses. A lot of them are one of the guys that spoke to runs a bunch of arcade machines and all that kind of work. So it's just kind of an aging industry, and it also brings to the point they've been doing this for decades. Why is it a banking issue, right? Just to kind of compound on that a little bit, the banking industry is really led by federal regulators, right? And state-based regulators, but a bunch of different acronym agencies that enforce compliance. And in the last probably decade or so, their guidance has been very convoluted and difficult for banks to follow. So it ends up making ridiculous things come out when the examiner sits and talks to the bank. So Nathan, you've got 300 ATMs. You know what? I'm going to decide to make you have to open up 300 different bank accounts for every ATM just so I can separate cash easier. And an examiner actually told a bank that, and force the bank to not be able to bank that business, right? And they force them through saying, "Hey, this could be an enforcement action to you." So,
wow.
yeah.
If I open one ATM, I don't even know how much. Like every Monday morning, I have to take a slug of cash and stick it in the back of the machine. How much cash is usually in an ATM? Like how much would I be carrying down 6th Street to restock my ATM?
Hundreds of thousands of dollars. It depends on how you do your process, but most ATM machines will only have about 20K or less in them. But I mean, I'm sure you've seen in the news where people pull up trucks and drag these ATMs out and do all kinds of crazy stuff. You take an ounce of intelligence and you watch someone feed it. Not advocating crime, but that's unfortunately a very sensitive area, and so that's why you'll see more armored car services. But every time you use those other third parties, they're cutting in on your fees, right?
That's fascinating. And I'm wanting to go roll up a bunch of ATMs now. Okay, okay. So how do you help? How do you make money?
So we make money by helping the institutions do compliance, right? So when let's just take a different market, like a THC dispensary, right? In Oklahoma has a ton of them. Texas, we're not quite there, but an Oklahoma THC dispensary says, "Hey, I have to have a bank account. I got to make payroll. I got to do something with this cash. It can't sit in a safe, which is also unsafe." And so they will bring it to the bank. Well, the bank has to do all this due diligence. Where's your license? Like, what is your criminal background? All that kind of stuff they've got to do, and all that due diligence ends up in like Word documents, background check systems, and all these disparate places. Well, then imagine if you have pretty much the only bank that's banking THC in Oklahoma. There's only a handful, and you've got hundreds to thousands of those customers, right? They're hugely profitable for you. You got great fees, but you're just a person in their mid 50s who's like literally trying to do this with manual processes. We come in and we automate all that process. And so when the examiner then comes in and says, okay, Nathan, show me where you did everything you said you're supposed to do, you can say right here inside Risk Scout, we have every T crossed and every I dotted, like
I
this is
see.
all our compliance stuff.
So who's paying you? The owner of the cannabis business or JP Morgan that wants to bank the cannabis business?
The banks and credit unions themselves. In fact, most of them are community banks and credit unions. So not even at the JP Morgan level. Like there's 8,000 community banks and credit unions in the US, right? 98% of them are under $10 billion, meaning they're like everyone you see around Austin or anywhere, where they've got a handful of branches and they're just trying to bank their community.
Interesting. Okay. What is an average bank or credit union pay you per month to use your tech?
Yeah, no. So the great thing is we start off small. So we have a $5,000 minimum. So it's enterprise software, right? But we have a $5,000 minimum, but very quickly.
Annually or monthly?
Monthly, MRR. Okay. Yeah. And what's great about it is our banks end up growing. We had a customer who was at that in November, who's now over 20K in just a matter of months, right? And part of that, Nathan, is because we actually charge off of each business that's under compliance. So as their businesses start growing, even if those businesses are just buying multiple products or working in multiple markets, those are all individual pricing for us. So here's the model, right? So you are a bank and you want to bank someone. Okay, well, you're going to charge them $250 a month because it's hard to bank their kind of industry, and they're happy because they have consistent banking. So $250 a month is kind of expensive in a normal banking world, but in high risk, it's actually really cheap. They'll pay us, say, $150, right, for that compliance work. And then as they grow and the more products they stack on top of that customer, like maybe I'm going to do merchant processing for you or insurance, then now I get to stack more and more fees. And plus I'm getting all the deposits, all the loans, all of the additional financial products. So we manage and open all that up, and all those apps just come through our system, and all the ongoing maintenance of the compliance is between the bank and you over electronic means now, right? Over the phones and online. So much.
So how many total banks pay you at least $1 per month?
Pay us at least $1 per month. So we have under a dozen banks. We have over 1,000 businesses on the system. We have, like I said, probably an average of usage right now is averaging in the 15 to 20K a month MRR.
That's where you're at right now, 15 to 20K MRR.
Yeah.
As a business.
No. So average of our customers as a business, we're right under 500K of ARR.
Okay, this is great. Wow, what a story. Yeah. Okay, got it. So just to be clear, you've got 10 banks paying you for 1,000 seats, and a seat is a cannabis business that they're trying to bank, right?
Right.
And and they're paying, well, hold on. If you have, okay, got it, under a dozen. So if you have like 5 or 6 customers paying sort of 10, 15 grand a month, that's where you get your 500,000 ARR.
Correct.
I see. Yeah. Okay, really interesting. Tell me the story of how you got your first customer?
Well, so this isn't my first rodeo. I've been doing this for 20 years. I was with a company here in Austin called Q2. Now everybody knows who Q2 is because we're literally on the MLS stadium that had the game last night. So, but I was around in that company when we were really young. I've done business B2B SaaS for banks for a long time. And I was out looking at this market. I'm a solutions guy first. So I went and looked at what the pain points were in banking right now. And there's lots of people doing money movement and all kinds of stuff like that. But people overlook these kind of block and tackling things that happen at banks. And so I went in and worked with some compliance officers in a couple of key banks who also became investors of ours. And that was about 2 years ago. So we raised a little over 3 million.
Okay. And launch was, you said 2018?
So we actually started in late 2019. And then the pandemic year was a weird year just for everybody. But we did a lot of building in that year, and then came out with a new brand, Risk Scout, new brand offering, kind of pivoted that name. And then so this is really our breakout year. So we had essentially 5K in revenue a month. Near like November of last year. Now we're approaching $500,000 of ARR. We're actually the end of the year, we're approaching over $1 million of ARR on track for. So that's
great.
It's really coming out, and it's great. Big banks now too. We're not seeing as many small banks.
Where's that growth going to come from? Adding more seats to the 4 or 5 customers you're with right now, or adding new whole banks altogether?
Both. So we call that expansion growth, or organic growth. We also have cross-sell growth. So adding additional products and services, additional, templates, like you want to do merchant processing, you want to do insurance, we can spin those up really quickly. At the core of what we built is essentially, you probably heard the term no code, right? We built our own no code platform. And so that allows us to not have to have developers launch apps. We can actually have our team back here launch the apps for the banks, right? But
so how much did you raise then back in 2019? 3, you said?
3 total. So we did it like a 2 seed round, like a seed 1, 2. Yeah.
I see. Okay. And did you price those, or were convertible notes with caps?
Yeah. So the first one was basically your typical safe, right, with the cap, and then the second one was a price round.
Okay, that first one with the cap, how much was that for?
We did 800K in the first round.
Okay, so and what cap did you run that? Like a 5 million usually?
Yeah, we did that straight out of the gate. That was like, we just came out. We had a great team deck. It's the typical, like, what's the formula look like? Yeah, well, about 5 million in valuation, and you figure out a discount for everybody, get everybody involved. A bunch of my early investors were Experian and bankers and lots of great people. So it was a lot. The first day of enthusiasm as you get going, right?
Yeah, yeah.
I also invested as well.
And then you raised two. Well, how much of the 800 did you put in?
100K.
So, I mean, is that, I don't know if you're like super rich or not. Does that mean a lot to you? Like, are you all in?
Yeah. That's all in. And then I'll be in the next round as well too. Like I'm parring in there, throwing in each round. So.
Okay. And then the 2.2 million you raised during COVID, I guess?
Yeah, man, that was a weird time. Yeah. Right in the middle of COVID. Yeah.
I mean, I want to learn that story. So what was the valuation you raised that on?
We raised that valuation, at 12 million.
Okay. And how did you do this during COVID? I mean, that's crazy.
Yeah, no, look, I mean, I think, the challenging thing is I have all my existing contacts and they knew where we were. But I think the biggest problem with new companies taking on new round of capital was that, in the first parts of COVID, all the way to the mid, VCs were looking at, stabilizing their existing portfolio, right? And so for us, we went back to some existing investors who knew the story, wanted to be involved. And, some of them just, instead of being pro rata, came in more than where they were and said, we're in it. We're going to come in with you.
Any plans to raise in the near term?
Yeah, actually, so we're on a the typical start of a Series A now, given that our revenues are cresting that point. And really, honestly, the biggest part is we're in that typical flux now where time to add more devs, time to add more sales. I can't mention the 2 partnerships we just landed, but they open up about 3,500 banks, trusted partnerships for resale. So that's another thing is rather than build a big sales team, working with our trusted partners to be able to push out, channel partners, if you will, right? What we do makes the enterprise sales go a lot faster.
Justin, what's the team size today?
15.
How many engineers?
8.
And how crazy are you comfortable getting with burn? Are you guys burning like net burn 50 grand a month right now? Or what's that look like?
Yeah, I mean, look, our net burn isn't bad. What I try to look at it as is, really trying to make sure we don't get under that 4 or 5 month of runway burn, because I just don't want to get in a spot. Like I'm never one to hire and then have to worry about putting people on, dock. So, and I'm lowest paid employee, in the company. So I think awesome. The bottom line is for us is, just get a good raise here, see if we can get a good valuation. And fintech is pretty enthusiastic right now.
How much do you want to raise and what would you consider a good valuation?
I think we're going to be looking around 8 to 10. It's a pretty typical Series A round. Honestly, man, the valuation is going to be interesting, right? Some of this is what market to bear, but if I'm a founder saying what I want, I mean, I think we're in the mid 30s, the high 40s, somewhere in there, depending on how we look at the TAM and the process, right?
Yeah. Well, we'll see what happens. I'm obviously rooting for you. It sounds like you've had no churn and you have a clear path to driving expansion revenue. Your net dollar retention past 12 months has got to be over 100%, right?
Oh, absolutely. Yeah. The churn is like absolutely non-existent, right? Because the only churn that we kind of exposed to is if a bank calls back their program, but they don't really churn the enterprise agreements with us because it's very sticky, right?
What a story, Justin. Let's wrap up with the famous 5 here, man. Number 1, favorite book.
Okay. I always listen to your podcast on this, and there's so many really great.
You listen to the show. You enjoy it?
I listen to the show. I enjoy it. I like the rapid fire. It's awesome stuff, man.
People always go, Nathan, why do founders agree to come on your show and you're just going to beat them up? So I can ask you this. You know the show format. Why did you agree to come on?
Because I think it's fun. I think actually, most importantly, I think there's a lot of people like me 5-10 years ago that didn't run a business, ran other, big P&Ls and everything, and don't know these things. And I think it's important to get the at-bats, and you do the at-bats faster than anybody. So, credit to you. And I think it's worthwhile, pushing that forward, paying it forward. Right.
Well, thanks for being transparent, man. It doesn't work without you. So what's your book?
Yeah. So Anatomy of Peace, written by Arbinger Institute. If you haven't read it, it's absolutely important. I've read almost every business book in the typical ones, but this one is about removing the obstacle that is working with people, right? Treating people like obstacles is kind of a natural human condition. And so I think reading this and understanding it is a little bit of a religious connotation, but not being overly religious, just more about understanding that people are people,
I love that. Number 2, is there a founder you're following or studying?
Man, I usually follow Elon. I mean, I think breaking the eggs and getting things done is pretty fascinating. At the same time, wildly irresponsible sometimes, but I like following and seeing what he's going to do. And then Richard Branson lately. I mean, how can you not follow these two guys and what they've been doing? So
Number three, Justin, favorite online tool for building Risk Scout besides your own?
I mean, personally for me, Risk Out Mixmax is a lifesaver because I can't do the Calendly thing. I got to be able to send calendar appointments all out everywhere. And I can never go back to like when, what time period, what's, time zone. So Mixmax has got a ton of features. I don't even use all of them yet, but I like them a lot.
Number four, how many hours of sleep do you get every night?
I sleep pretty good. It's stressful during the day, but I get about 8 hours of sleep.
That's great. And what's your situation? Married, single, kiddos?
Married, 2 kids are teenagers, so it's a little easier. They're usually sleeping pretty late, especially in the summer. So.
That's a busy guy, though. How old are you?
I'm in early 40s, 42.
42. Last question. What's something you wish you knew when you were 20?
Man, I'll tell you, it's the lesson that Anatomy of Peace taught me. I'll tell you this way. Sometimes meritocracy builds internal struggle, internal competition, right? I've been in way too many businesses where it's like sales versus development or sales versus operations or what have you, right? And it's always about who's going to make the numbers, who's going to make President's Club and end up on the beach. Well, it's generally the sales team, right? So when it comes down to is really realizing we're all in the same boat, even though we have different factions or areas of that boat, and not treating people like an obstacle to your way, but someone who can reach your hand up and pick you up. And I think if people get that concept, read those books, but get that concept, I think everything in business works better.
Guys, Risk Scout grew from $5,000 a month last year in revenue to $40,000 a month today in revenue, on a path to break $1 million in terms of ARR by the end of this year. They've raised about $3 million to do it. Last one was $2.2 million on a $12 million valuation, teeing up and getting ready for their Series A. They make it easy for banks and credit unions to bank the unbankable traditionally, the cannabis businesses, the ATM businesses, providing a very important function here for customers today, very enterprise motion. We'll see what happens next. Justin, thanks for taking us to the top.
Thanks, Nathan.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.